the total landscape of mobile home parks, the whole industry is getting consolidated from the top down, and there are less and less mom and pop owners, which means that will be less and less good deals and great deals out there. So I would say for those of you who want to invest in mobile home parks, right now is still a good time to jump in because we're still early on in the curve of the entire real estate cycle for mobile home parks. So I think that's the opportunity right there.
Welcome to the How to Scale Commercial Real Estate Show. Whether you are an active or passive investor, we'll teach you how to scale your real estate investing business into something big.
Charlotte Dunford is a partner at Johns Creek Capital. They are a private equity firm focusing on mobile home parks. Charlotte, welcome to the show.
Thanks so much for having me.
Hey, no problem. Glad to have you on. There are 3 questions I ask every guest who comes on the show. In 90 seconds or less, can you tell me, where did you start? Where are you now? And how did you get there?
So I started with a corporate job out of college, just like a lot of people do. And after which in the same time, I was buying real estate while I was holding that job. But soon after that, my salary was not enough to fulfill the ambition of scaling the business. So I quit my full-time corporate job while my husband was still in school. So it was kind of a risk for us, but it was a calculated risk because I was already buying homes on the side, having some real estate experience, and started in 2019, our first mobile home park, and then scaled to today's 27 mobile home parks with a total asset value, investor subscription of roughly $5 million.
That is really cool. Absolutely fantastic. So you guys own 27 mobile home parks at this point?
So we, in our portfolio, we have owned 27 mobile home parks. We recently sold one, but we're also in the process of acquiring another one.
Sure. Okay, cool. And so how are mobile home parks, how do you quantify that? Is it by the number of pads that are in them? Or what do you say when you say, hey, this is what we own? Because the number of parks versus number of pads is probably entirely different.
Right. So number of parks is not really, the doors as far as in commercial real estate or multifamily. So in mobile home parks, you're really looking at occupied lots.
Okay.
Number of paying tenants.
Right. Okay. Gotcha. So you guys have 20 or had 27 parks that have come through your portfolio. How many, what's the average pad per park then?
Average pad per park, we're looking at anywhere from 10 to 20 lots all the way to 30 lots. So we're in the smaller space, so small to medium level mobile home parks, kind of a niche within a niche, which means that we don't have a lot of competition. We can get parks at a very attractive cap rate. Right. Yeah, so on average, you're looking at about 20 pads.
Gotcha. Okay. Now this is cool. Yeah, because a lot of times we hear, especially on this show, like, hey, go bigger, sooner, faster. And that's going to be one of the ways that you scale. But it sounds like you guys have found a way to actually kind of go the other direction in order to grow. Can you talk to me a little bit about that?
Well, the most important thing is the good deal, is to acquire at a good rate, and you buy right. So in order to buy right, you must focus on niches and opportunities where you can escape competition, sort of. So there are only 2 ways to do this. One is to focus on a space where most people are not looking at, or they have been ignoring for some reason. Or number 2, you're so competitive to the point that you just have so much money. You're one of those big institutional funds that you just rule out competition just by being so big. So for us, we're definitely not the second one, but we're the first one. We're focusing on this diamond in the rough. Not necessarily we're going after it because it's small, but it represents a lot of things, such as a higher cap rate and more solid deal structure, and easier to fund, and also very attractive returns.
Right. How are you finding? One of the things I've heard is that it's challenging. The smaller the mobile home park or mobile home community is, the harder it is to manage, the harder it is to find and support, say, on-site maintenance, things like that. How have you guys found a way to scale with the smaller parks?
Right. With the smaller parks, I wouldn't say that it's more difficult to find on-site maintenance. On-site maintenance is always you find local contractors with any bigger parks. If you want to hire someone full time, that would be an expense. But that's not really the model that we operate under. So it's a lot of times we operate everything in house. So we take over the management once we buy the park, instead of outsourcing it to the third party property management firm who would not really put as much effort as we would like them to be, as much as we would ourselves, because we always have our own asset in mind, and we also invest in all of our own deals on top of our investor funds. So given that mobile home park is relatively a tough asset to manage, and also because they're smaller, and generally if you're not 100 pads and above, it's extremely difficult to find any third party person. So we do have on-site person, but he's not getting free rent just to fix our park up. That doesn't really work in any scenario, I don't think. What we'll do is that, if he is a contractor, we just pay him an hourly rate, and the rent rate is the same. That way, if we want to raise rent, we don't have to raise someone's rent for by $100 at a time, because he all of a sudden he was paying nothing and now he's paying everything, and that way it's not a good business practice, and we just never see that working out for anyone, really, big or small.
Okay, cool. Tell me this: what are some risks you see in the mobile home park space right now that you guys are actively trying to mitigate?
Right. Mobile home parks actually in this economy has lots of risk mitigation against inflation. Actually, it's relatively less risky than a lot of other multifamily. First of all, you have less cash tied into the deal, so that's already less risky. But I think, as with any investment vehicle, there are risks. So for mobile home parks, I would say the number one thing is that, like I said earlier, you have to buy right. You have to make sure the utility structure is solid. The biggest money loser in mobile home park is utility issues. So that includes, overpaying for utility bills. That includes utility sewer and water leakage. That not only means the higher utility bill and repair and maintenance bill, that could also shut your park down, which is the biggest risk, because the health department may go after you and they have the right to shut the park down. And I think the biggest risk is to really be careful with the park infrastructure, and to make sure that you don't have any insurance issues, because insurance companies, a lot of times, if you have a park that's really rough shaped, they will probably not insure you, and that's another risk that people need to be careful with.
Yeah, no, certainly insurance is a big ticket item for many of us right now. What are some things that you can do to bring down, I guess, some of those potential costs? I know you said that if you have a park that's in rough shape, but I mean, if you have a 10 to 20 unit property, I'm assuming a lot of those are mom and pop run, and maybe some of those have deferred maintenance. How are you guys overcoming that?
So we actually don't, we avoid all the properties that have really significant deferred maintenance, because deferred maintenance don't do anybody any good. Deferred maintenance is like taking a shower. If you don't take a shower, it's bad. But if you take a shower, you're just normal. So it doesn't really add any value, even if you take care of deferred maintenance. So even if just because a park is mom and pop run, doesn't mean that it has significant deferred maintenance issues. Doesn't mean that the mom and pop run park are rough shape, because for decades, all the mobile home parks have been mostly mom and pop run, and some mom and pops do a good job in running those mobile home parks. So I wouldn't say that that's an issue. As far as bringing down the costs of deferred maintenance, again, I think you just have to have a really solid infrastructure at the park. The conditions of the roads, conditions of the homes, age of the homes, and the utility structure.
Got it. That's really, really cool. Now, are you guys doing any park-owned homes, or are you guys strictly lot rent?
Well, we sometimes have to have a mix, because a lot of those parks, we don't have a rule that says it has to be all tenant-owned home, but we definitely want to focus on majority tenant-owned homes. And if there are park-owned homes, then the park-owned homes have to have in good condition, and we have to look at the ages of the homes too.
Right. Yeah, I would imagine park-owned homes bring their own set of challenges, maybe that you don't want to deal with. What are opportunities right now that you guys are seeing in the market as it pertains to mobile home communities?
Well, I think the affordable housing crisis in the country is worsening, and it's always been there, but it's worsening in today's economy. So, as far as opportunities, I think the overarching big problem of the affordable housing crisis definitely presents its own opportunities. And I think as far as the total landscape of mobile home parks, the whole industry is getting consolidated from the top down, and there are less and less mom and pop owners, which means that will be less and less good deals and great deals out there. So I would say for those of you who want to invest in mobile home parks, right now is still a good time to jump in because we're still early on in the curve of the entire real estate cycle for mobile home parks. So I think that's the opportunity right there.
Right. Yeah, absolutely. Absolutely. Yeah. The affordability, I mean, that's something that, I mean, it's countrywide and there's not a whole lot you can do about it. But tell me this, how, I guess we look at rent increases in multifamily and then compare that to mobile home parks. And do they kind of keep up neck and neck as far as percentage increases in a particular area, or do they differ somehow?
They're definitely not the same as far as percentage increases. Usually, depending on the area, we usually don't want to raise the rent more than $50 per year. And in some areas, $25 per year. So it really depends on when the last rent was increased and the market rent in the area. And as far as market rent, you're not only comparing what the other mobile home parks are charging in lot rent, but also what the other housing products are charging. What you really want to do with mobile home parks is to provide the best option for best value for money is affordable housing, right? It has to be less expensive. So you really want to have a gap, $400 to $500 gap between mobile home park lot rent and the other housing, let's say mortgage or apartment building, single family home rentals, their rent amount. You want to make sure tenants are really getting this less expensive option. That's really the key.
Right. So you're saying if apartments are renting at $1,000, you don't want to have your lot rent being higher than say 500.
Right. No. Yeah. $500 in lot rent is almost is pretty rare, even in the heated markets. Unless you're in a really, really heated market like Arizona or out in California. But in the most part of the Midwest and the Southeast, you're looking at in the $200, $300 range.
Got it. Which goes back to your, don't increase 25 to $50 a year, because obviously $50 on a $300 rent, that's 1/6, so roughly 16.6% raise if you raise it $50 that year. So that's a pretty substantial rent raise there. That's really, really interesting. What would you say has been the hardest lesson that you've learned since you bought your first mobile home park in 2019?
So the hardest lesson, like I said before, is you just have to make sure you buy right with the right infrastructure in place, because you can't change the infrastructure of the park. And those problems can be extremely expensive to fix. So you want to make sure you're really, really careful with the utilities.
Got it. Very, very careful with utilities. What was I guess when you say that, what's the story that comes to mind for you?
So the story that comes to mind, there's several stories, but mostly related to sewage leaks and just water line leaks. So sometimes you can be very careful with the utilities, but sometimes you get sucked into the problem. So just really make sure you have enough reserves to prepare for any potential issues. They may not always happen, but when they do happen, they're going to be expensive. So I think sewage leaks, which leads to higher bills. And we once took over a park where they were paying $7,000 per month on water bills. So there were leaks everywhere, and the previous seller just paid the fees, which is ridiculous. So we really went out there and hired pretty much a huge plumbing team to really identify and locate all the leaks, and we fixed all the leaks, and that brings down the normal water bill, which is about $1,200. So think about a $7,000 per month in water bill, bring down to $1,200. That's a value add in itself. So you got to be careful, and it's an expensive fix, but it did make the money back pretty quickly.
Well, yeah, no, that to me just sounds like opportunity, where you go, okay, yeah, cool. So clearly there's an expense for you, which brings your net operating income down, which means that I'm going to pay you less for the property.
That's right. Yeah. So for the seller, he was really baffled on why, the water bill was so high, he never really thought to do the plumbing job and to really fix the thing. Didn't really understand $7,000 in water bill is outrageous. So, but for us, that turned out to be opportunity. We're able to get the property at very significant discount, and we were able to fix that problem pretty quickly.
Oh yeah. Oh yeah. No, that's really, really cool. Do you guys buy parks that have low occupancy with the intent of increasing that occupancy?
We do buy parks with lower occupancy as far as the intent to increase the occupancy. That, a few years back, it was a lot easier to buy used mobile homes or new mobile homes and bring them to your park. Now with the labor shortage, it's extremely difficult to acquire mobile homes, used or new, and bring it to your park. It's extremely expensive endeavor, and that will cost you more money than what the value would be for a $100 lot rent. So nowadays, for I think a lot of operators, and then for us for sure, we have the intent to advertise the park and advertise the lot, and we budget for lot prep fees to attract tenants to bring their own mobile homes into our park, and that's how we intend to increase the occupancies.
Right. Why does someone move their mobile home? I mean, if you raise rents $50, it's going to cost them, I don't know, 5-10 grand to move a mobile home. Like, why do people actually end up moving their mobile homes?
So people don't really move their mobile homes from other parks, period. They don't do that. Very rarely do they do that. So the only chances they move their homes into your park is they're buying a new home, and they're doing a financing package with the mobile home dealer, that they're doing this through financing. They don't really pay out of pocket. Some may, but most don't. Buying them. So, but they certainly never move their mobile home from an existing lot or existing mobile home park that they were living in to another park. So that almost never happens. They usually sell it or walk away. So in the cases where mobile homes do get moved, is because they're buying a new home and moving into your park.
Got it. That makes a lot of sense. So if you're buying a park with low occupancy, one method would be to advertise for people, or maybe even coordinate with your local distributor or supplier, whoever it is you have to go to for mobile homes, coordinate with them and just let them know that, hey, you guys have spaces available.
That's right.
Yeah. That's really
that's right.
Yeah, that's a cool.
Yeah, and then you can pay them a kind of a commission if they were successfully able to bring a home into your park, and that's a really good deal for you.
Right. Yeah, absolutely. That's some of the best marketing that's out there. What's kind of a going rate for that? Say I went to a local dealer and said, hey man, send me some of your people buying new homes. What should I anticipate paying them?
So it depends on what kind of people you're talking to. So you can pay maybe $1,000, or if it is a tenant in your park that you're saying doing a referral program, maybe $500 in cash, or sometimes gift cards work. But mostly, if you go any lower than that, I don't think anybody would be too interested in doing that much hassle for you. Yeah.
Right. So a dealer sends a prospective tenant your way with a new mobile home. You can expect to give them roughly $1,000 and say, hey, thanks for.
Right. If the tenant ends up moving in, of course.
Sure. Yeah. Absolutely. No, that's cool. That's a very interesting way of filling your parks. Have you had any challenges buying a low occupancy park and then filling it?
So I think the infilling is always challenging. So I wouldn't say that if your primary overarching strategy is infilling, then that's not what we specialize in. And we don't really focus on that because in today's market, it's just not a viable solution. Not so much because it takes, like I said, it doesn't make sense economically. So we don't really focus on that. So I wouldn't say there are any challenges in us actually trying to do that because that's not really our strategy.
Got it. That's really, really cool. Charlotte, if you were to think about your success from 2019 till now, what would you say is one of the keys that has helped propel you forward?
One of the keys is to make sure that you build a really powerful team, that it's a team sport. You can't do this alone. And you want to make sure that you have your team members who are very specialized and very good at what they're doing. And you guys work as a team and achieve the common goal. So that's the most important thing, I think, as someone who wants to start a company, as someone who wants to scale their business. You want to make sure that you're not the only person wearing all the hats. You have to delegate. You have to assign those people who are good at what they're doing to do that job.
Right. Who was the first key team member you brought on?
Well, I think the first one is my partner. He's not a team. He is a team member, but he's my business partner. So he has a really good engineering background, construction background, and background in running businesses in general. So that was really a no-brainer.
Got it. That's absolutely awesome. Charlotte, thank you for taking the time to come on the show today and really break down.
Thank you so much for having me.
The mobile home park space, how you guys are finding opportunity in the small to medium-sized parks, some of the risks that we can hopefully avoid, and especially as it pertains to infrastructure and things like that. And then also some just helpful tips and tricks on how to fill our parks if we're buying these and there's lower occupancy, how to coordinate with local dealers and bring prospective tenants, new prospective tenants into the park. So that's loads of fun. Been a pleasure to have you on. If our listeners want to get in touch with you or learn more about you, what is the best way to do that?
The best way is to find me at our website at johnscreekcapital.com, and we'll go from there.
Great. Thank you, Charlotte. Appreciate it. Have a great rest of your day.
You too. Bye.